Hey everyone. Hi everyone. I hope you can see me, hear me clearly. Just a very quick thumbs up if you can. All right. Okay. Sorry, it just took me like a couple of minutes to figure out how to start the live. I'm sorry about that. Slightly late. Okay. All right. All right. All right. All right. All right. All right. You can see me, hear me, right? Everyone. Just a very quick yes, no. Then I will quickly start. Okay, awesome, awesome. Okay, so what type of conversation you would like me to do, right? I mean, an honest one or a optimistic one, right? So I'll try to sort of. Okay, so I'm hearing a lot of yeses. Let's hit 1K likes when he joins. Thank you, everyone. Okay, all right, guys. So basically, see, there are four specific things that I would talk about. So let me very quickly set the agenda. So there are two viewpoints in the market. I'll quickly explain it so that you get perspective of both. Second key thing, I will talk about how to prepare for both types of markets, very quick inputs. Third is that I will talk about some of the new things that are coming up in the market regarding interest rate, China crisis. So I will talk about that, right? And then finally, I will express my viewpoint, right? That hey, what is it that what I feel is going to happen. So these are four specific points that I will be speaking. Okay. Okay, awesome. Right. So two scenarios in the market, and I will not give you my viewpoint that I usually give that hey, I'm optimistic about the market, I'm bullish about the market, etc. etc. I will try to show you both the sides of the equation, right? So that you can make a call, whatever you feel is the right call accordingly, right? Okay, so there are two perspectives in the market, and this is what generally the perspective is. It has got nothing to do with just today's calls. Today's call, right? So please don't worry about my courses, etc. There are a lot of people who keep on commenting random stuff. I will take the call towards the end. Okay, all right. So there are two specific points about the market, right? So one is that there is a optimistic scenario in the market, right? So the optimistic scenario, and this is a macro viewpoint. So the first scenario can be optimistic. For example, if you take a viewpoint of a lot of investors, they are optimistic. They are generally optimistic about the market because they look at history. They say that hey, 2000 dot-com bubble burst, markets came back up, great. 2008 financial crisis happened, yes, the markets corrected by 50-60%, but again, uh, came back. Surya, I don't even know you. So yeah, so that's two, right? Third key thing that hey, the markets corrected in 2020, it came back up. So all those points are there, right? So that is the first viewpoint, that markets, they correct but they came back up, right? So that's an optimistic viewpoint. The another interesting viewpoint that is expressed by them is fairly simple, that hey, whenever the markets correct, they make a new high because in the long term the markets grow. So if you are a believer in that type of an optimistic scenario, then 5 7 10% 20% fall, it can happen, but the markets will recover, right? Just to give you an understanding, right? Just go and check, right? I mean, you guys can Google with me. Go and check at what price point HDFC Bank was trading when the 2020 crash happened, and at what price point is it trading today, despite all the falls, right? And how much time has passed, right? So around 1.5 2 years. So you would have still made a lot of profits, right? So what I'm trying to tell you is fairly, guys, please stop commenting on my courses, all that stuff. You can go and check it for yourself. Just go on the website, you will see, and contact people who have taken my courses, right? So they're like, yeah, so I don't even want to go there. People are unnecessarily making me advertise my courses. Okay, so anyways, okay, so I hope you get the picture that the first perspective is an optimistic perspective. They simply say that hey, market's correct, they come back up, and there is nothing to worry about. A classic case in point is the 2020 crisis. Now, an important question or important concept to understand here is that hey, why does this happen? Because it's fairly simple, that the entire economy is controlled by the government, whether we like it or not. Let me give you another example to prove this. The example is that, for example, try to invest in gold. Can you invest in gold very easily? You will say, Akshat, yes, I can invest in gold. I can go and buy gold through my jeweler. You can't, right? It's very difficult to do it, right? Similarly, I ask you for second option. Almost all of you will say that hey, we will buy in SGB, sovereign gold bond. That is the probably the best way of buying gold. I'm not commenting on that. But who has pushed you to invest in gold via SGB? It is the government, right? They control the entire thing, right? I mean, if they want you to invest in gold, you will invest in gold. So we are merely like puppets. We will dance around whatever the government is saying, right? So that is an honest thing. If the government wants to take the market after 2020 COVID crash, they will print a lot of money, they will escalate the market, all good, right? So all that stuff happens, right? So I hope you get the simple picture that, if 2008 crisis, 2000 crisis, 2020 crisis can be managed, government decides where you will invest, government decides the FD rates, government decides the home loan rates. What is happening, fundamentally speaking? You as an investor, your job has become simply that, hey, go to the office, get your salary, invest wherever the government is telling you. That is genuinely what is happening, right? Now, which is both good news and bad news, right? So good news is that, hey, if the government is handling the economy and if they can do a good job, then you are in safe hand. Just keep on investing in the stock market. Nifty will keep on cutting its previous peak and you will keep on making money. That is the thing, right? No, I'm not talking about BJP Congress. I'm just speaking about economics, right? I did not even take any politician's name. Okay. So that is the honest truth. And these are the first set of facts that you can look at, right? So there is no reason to panic if you believe in the narrative that government controls the economy, and it has a lot of potential to control the economy. There is a phrase for it. It is called as don't bet against the feds. How many of you have heard of this phrase, right? So many of you would have heard of this phrase, that don't bet against the Fed. What does it mean, right? It simply means that, hey, please do not take actions or do not be a contrarian investor as per what the government is telling you. If the government is asking you to invest money, invest money. If the government is saying you withdraw money in a way, then withdraw money, right? So that is what is happening. Now, I don't know how Shikhar Dhawan's conversation came into this. So anyways, okay. So I hope you get this first key picture. Okay. Second key picture, a contrarian viewpoint is propagated by a lot of people. For example, if you hear Robert Kiyosaki's commentary, he's extremely bearish about the market. He simply says that, you know what, if you choose to trust the government, you will lose a lot of money. What is his investment philosophy as of now? His investment philosophy is that, hey, I'm buying gold, I'm buying real estate, I'm not investing even 1 rupee in the stock market, in mutual funds, in ETFs, not buying any of that, simply doing what type of investing? Real wealth preservation, asset investing, right? So these are the two perspectives. Let me expand a little bit about the second perspective about Robert Kiyosaki. So basically his viewpoint is that, hey, and there are a couple of stories that will help you understand this. So the first story is about the debt to equity. So you might already be aware of the fact that there is a lot of debt in the economy right now. A lot of people are extremely worried that, hey, debt has risen very, very high. And these are legitimate reasons to worry, right? So Robert Kiyosaki also says the same thing, that, hey, there is a lot of debt in the economy. Back in 70s, when he was a youngster, his viewpoint was, at that point in time, the debt to equity in the market was somewhere around 30-35%, right? Now, debt to equity is somewhere around 120%. And why am I talking about 70s? Because in 70s, something interesting happened. There was a person called as Paul Volcker, and basically he was the US Fed chair. And basically what he did was that back in the early 80s, there was very high inflation in the US market. So he increased the interest rate very, very sharply, right? And when he increased the interest rate, please watch my last video. You will understand all this stuff, right? I've explained a lot about that, right? So he increased the interest rate very, very sharply and was able to bring down inflation. But now what is happening is that something similar is happening, that inflation is very, very high. In fact, this time around, the debt to GDP ratio is very, very high. Michael Burry is also worried. A lot of other people are also worried, all that stuff. But please understand and please compare it to the first narrative, that if you are of the viewpoint that government has complete control over the economy, they can move around things, they have complete control over money printing, they will be able to handle the economy, you should not be betting against the government. That is point one. Point two, if you are of the viewpoint that, hey, I am of the viewpoint that government will not be able to handle anything, then please believe in Robert Kiyosaki's, Michael Burry's argument, because, and this is the crux of the story, and this is where I will, after this, I will speak very few points. This is the crux of their story, that if the government has infinite money printing power and they can continue to dance around with this interest rate, quantitative easing, quantitative tightening, they will be able to manage the economy. Okay. Now, here is the most important key takeaway for today's video, and it is very, very simple. The most important key takeaway for this video is that what is your best alternate? If you choose not to invest your money in the stock market right now, where will you invest it? Okay, you will say that I'll go and buy real estate. Okay, you should do it, right? You should build a hedging strategy. This brings us to second part of the discussion today, that hey, how do you prepare for both the scenarios? So number one thing is that please do not bet against the Fed. This is something that even I'm not doing, simply because of the viewpoint that I do not have much options, right? You have to be optimistic about the stock market, whether we like it or not. The entire doomsday scenario would be that hey, the government is not able to handle the economy. What would happen in such a situation? The situation would be that we will become like Zimbabwe, right? Or the world will become like Zimbabwe. Whatever money is there, that is not there in real assets. For example, if you don't have gold, physical gold, if you don't have physical real estate, if you don't have physical commodity goods with you, that is real wealth, right? If you don't have this, then your only option is to go and invest in the stock markets. That is all you can do. Whether we like the narrative that hey, Fed has lost control, Fed has not lost control, debt is very high, this is very high, all that is great, but tell me a better option. What can you do? Right now, as normal retail investors, we can't do much. All we can simply do is fairly simple, that we can just simply continue to invest in good fundamental stocks. That's all we can do. If it comes to a situation where debt situation has spiraled out of control, as what Robert Kiyosaki is saying, bunch of other investors are saying, if that truly happens, that will be a bad phase for the economy, right? And that will be really bad, right? But honestly, we can't do much with it, right? Okay, so I hope you understood the macro picture. Now let me very quickly comment upon what I am doing in the market, right? And what the evolving few crises are. Okay, so number one, what I am doing, I'm preparing for both type of markets. So number one, I'm buying, and this is something that I've said over and over again. I will just quickly recap it. That number one, I am buying good stocks. I am not shying away. Whenever there is a downfall, I buy it. My perspective is still very much intact, that hey, we are still in a sideways market. Markets have not given a breakout, neither they have bottomed out in the sense that it's not as if that they have completely corrected and they are going to go to 7,500 right now. No, so it is going in a range. So simply keep on buying that range, right? So if you feel that hey, a good support level right now is 16,400, 500, we are close to that support, great buying opportunity. If it falls more, then have a little bit of cash so that you can buy more. So this is one, right? And please do this only if you believe only if you believe in that heyday narrative, not the doomsday narrative. Okay, so I hope you get this first key point, that please trade the channel. Please do not buy stocks when they are overinflated. For example, a lot of you were buying stocks at 18,200, 300, and that was a bad move. Okay. Number two thing that I'm doing is that whenever opportunity presents itself, I'm going to book profits. This is something that I've said over and over again, that long-term investing does not mean, hey guys, this is not my helpline number, whatever has been posted, this is spam. Please avoid spamsters. I'm reading in front of you. I'm not typing anything. Okay. So yeah, there are a lot of spam comments that go on. Okay, so number two, please ensure that you are booking profits from time to time. Booking profits does not mean that, for example, if you have 100 stocks of, let's say, I'm using a hypothetical example. Okay, hypothetical example is TCS. So let's say that you bought TCS at 3,000, it goes up to 3,500. Booking profit does not mean that you have sold all your 100 shares of TCS. Booking profits means that you sell 20 stocks so that it gives you enough cushion to stay in the market. Okay, this is two. Point number three is I am hopeful, right, from a long-term perspective, that there will be breakout, because I am in that camp one. I'm not in camp two, where I'm assuming a doomsday scenario. Why am I not in camp two? That's an entirely different conversation. Maybe I'll have it some other day. But I hope I'm able to talk about that. I'm able to explain it to you, that as to why am I in camp one. It is simply because of the fact that I don't have many options. Okay. But having said all this, what I'm doing is that I'm still hedging my risk. So how am I hedging my risk? For example, let's say that I have, hypothetically speaking, let's say 1 crore portfolio. Okay. Now, out of that 1 crore, I will have a little bit of investment in real estate. I will not buy like 1 crore worth of real estate. There are 20 lakh shops that I can buy, right? In tier 2, tier 3 city. I will go and do that. So that becomes like a hedge for me. Okay. And rest 70-80% of my money will be in the stock market / crypto market. So to say. Okay. I do not talk about cryptos for wide variety of reasons. There is no point. I in fact have stopped making a lot of videos also, right? I mean, there's a like unnecessary pointless commentary that, hey, why are you not write tomorrow about this talk that you have talked about today? So I don't want to sort of comment on all that stuff. I am a believer in cryptos. I am a believer in real estate. I am a believer in equities, right? I accordingly plan my portfolio that way, and that is the same thing that you should also be doing. I'm not here to prove the point that a real estate market is the best, or stock market is the best, or falana neem ka asset class is the best. I'm not here to do all that argument. Depending on whatever you can understand, you should invest your money in that and be responsible for it, right? So that's all I can say. Final point about the crises, right? So this is the final section, and after this I'll take Q&A for 10-15 minutes. So the final point is about the new crisis that is emerging. So couple of quick points there. One is that there was a lot of talk about China real estate crisis. I in fact came out with a video much before saying that, hey, it's not going to derail China, and that is exactly what has happened. Why? Because again, you need to go back to that camp one. Okay, camp one means that government has infinite ability to not only move around the interest rate, money printing, but they also have infinite capability to manage debt. What does managing debt means? It simply means that they roll over the debt. Okay, what happens in the future, I don't know, right? I mean, 20-30 years down the line, something bad will happen, I don't know. But as of now, can government roll over the debt? The answer is yes, and that is precisely what the Chinese government is also capable of doing, and they have done it. So one could argue that the Chinese government has been able to avert the debt crisis that was there. So that is point one. Second crisis is around the fact, and some news came out that Xi Jinping has been on a lockdown, all that stuff, right? I don't know, right? Even if that is the case, what is going to happen? You guys tell me, right? I mean, probably there will be a little bit of jerk in the market, right? Little bit of up and down. It's not as if that China will stop functioning, right? They will still supply material, they will still trade with people, whether it is military rule, whether it is non-military rule. How does that impact anything, right? So that's two. Point number three is Russia-Ukraine crisis. Russia is doing a lot of other stuff. Is it impacting the market? No, absolutely not. What are some of the real crises? Or let me talk about the final point. So final point is regarding the interest rate crisis, right? So interest rate crisis means that, hey, the Feds are going to jack up the interest rate very, very quickly from this point on, right? They recently did a meeting on 22nd September, if I'm not mistaken on the date, and they jacked up the interest rate by 0.75 or 75 basis point, right? In the next meeting, will they do it by like 1% or 100 basis points or 125 basis points? No. Okay. It's highly unlikely because interest rates have also risen, right, in absolute terms. So a lot of interest rate crisis has also been factored in. This is what I can say. Now, what is the real crisis, right? So let me talk about the real crisis that no one is talking about. So the real crisis is that point number one is that debt to equity or debt on overall in the world is very, very high. Okay, this will play out in the form of a revolution, right, on the roads, in the sense, right? Now what do I mean by revolution, right? So for example, right now a lot of middle class, lower middle class, they are paying a lot of taxes. How? Right? Not direct tax, not indirect tax, also inflation tax. Okay, now if we get into a situation where there's a lot of taxation or this indirect tax that is being paid by middle class and lower middle class, that is when revolution happens. This has happened during Russian Revolution, this has happened during French Revolution, this has happened during Mughal times, this has happened in so many times. There is a very clear roadmap to this. Okay, so this is where the real problem is, that if the world cannot control the debt, then from a long term perspective it will lead to debt crisis. Debt crisis will play out on the roads, it will not play out in the stock market per se. That will be a bad scenario. So uh, do future proof yourself, right, by buying some real assets, what Robert Kiyosaki says. I agree. Not all your money in that, because as normal retail investors we would not have that quantum to borrow like $300 million from the banks to invest in real estate. We can't do that. Robert Kiyosaki can do that. Okay, so yeah, so I hope this is the first real crisis. I hope all of you get it right. Second key real crisis right now is the supply chain issue. I don't know how extensive this is or how pervasive it is as of now. What is supply chain crisis? It simply means that governments can print a lot of money, but they can't print gold, they can't print commodities, they can't print food, they can't print oil, they can't print paper, right? These things will take time to get shaped in the economy, right? um, is supply chain crisis really bad? Now it really depends from sector to sector. So maybe I'll make a separate video on that. But again, to cut the long story short, it was a lot worse a few months back. Now it is much better in certain shape. Okay. Okay. Now comes the final point that, hey, am I still investing in the stock market? Yes. Did I invest today? No, because I'd already purchased at 17,000 zone. I do give out quick commentary on my YouTube community tab on my courses, etc. Consider if you would like to join, etc. etc. I'm not overselling it, right? I neither am I promising that you will get stars and moons, all that stuff. I teach things fundamentally so that you can make better calls and more informed calls. Okay. So this is one. Second key thing, am I buying cryptos? Yes, right? So I do that, right? So this is two, right? Third thing, right? I'm buying cryptos. Number three, I am buying real estate as of now, right? Outright, right? I'm not doing REITs investing. I've already explained a lot why I do not do REITs investing, because that again is like buying a stock only, right? I mean, if you're buying REITs, then it's better just simply invest in stocks, because they will both meet the same fate. So yeah, so these are 2-3 points that I'll leave you with, that I'm still investing. I am bullish about certain stocks. For example, HDFC Group stocks, I'm bullish. TCS, I'm bullish. Rest I can't say, otherwise you will start holding me responsible from tomorrow. But yeah, I hope you enjoyed this brief conversation and you got a perspective of what I'm doing. Let me take like questions for the next 10 minutes, right? And then we'll close. Okay. How you are feeling right now? Better. Thank you. Okay, I'm not going to suggest stocks, guys. I mean, there is no. Can you post link for your YouTube community? Okay, so let me take. Akshat, thanks for coming to one. How can I meet you, sir? Please meet me. Or I'll remove spams. Okay, Harsh, I'll try to do that. I don't know how to make someone mod, but I'll definitely try doing that. Kunal asked, what about small caps? They would be getting affected the worst at market. No, so Kunal, see, small caps will exhibit a lot of volatility. When they fall a lot. When they rise a lot, right? So volatility might be there, but I don't think that they will fall quite a lot, because they've already fallen quite a lot. So yeah, so that's what I would say, right, regarding small caps, right? So you should be okay. How much it costs buying a commercial property in tier 2 tier? Can you please comment on it a little? So it depends on the type of commercial property, the exact location, but I would say that you can still find good commercial property in tier 2 tier 3 city in 20-30 lakhs also. Okay. Okay. Any views on Wipro? So see, I personally feel that TCS is a better company compared to Wipro. So if again you're taking the bet, see, if you're trying to do it on, if your goal is this, that hey, I want to make money in the next 2 months, right? I can't comment on that. Okay, but if you are saying that hey, I have my goal is to make money in the next 3 years, right? Then should I buy Wipro or TCS? Then I would say TCS, for the simple viewpoint that TCS growth prospect are much better compared to Wipro. So that's what I would say. I'm not going to comment anything, right? I mean, which stocks specifically, etc. Right? So yeah. So guys, I don't offer any discount on any of my courses. I'm not into that, unnecessarily like timing, making people buy a course on this discount, that discount. If you see value, take it, right? Otherwise, it is unfair that I'll offer it to some people at some price and other people to other price. So we just set a price and we are done with that, right? So yeah, so that's what you will say. IEX, no. So I have already done an entire video analysis of IEX, right? So there is an entire fundamental video that I've done, so you can go check, right? Banking stocks are very good, right? See, guys, I mean, don't do it by like a festive season is coming, so I'll buy like a couple of stock, right? And then suddenly they will give a rise. No, it doesn't work that way, right? Maybe very few times it happens that overall, if the market sentiments are bullish, then it might give a run up. But net, there is, you should not try to be so short term. See, think about it this way, right? I mean, you invest like 1,000 rupee on a particular stock. If you are making, let's say, 40% gains in the next 2 years on that stock, is it bad? The answer is no. Why are you looking to make like 5% gain and sell it off in the next 3 months? Yeah, so because you'll have to again reinvest that money, right, in something better when the market is actually giving a up run, right? So yeah, so that's what I would say. HIL, I don't know what that means. Gas companies, MGL and IGL. Ravi Kumar, these are good for trading, right? Not for investing. Right? Bonds are fine, right? It's good for hedging, right? Your portfolio, but it is not something that will give a lot of returns, right? Amrit Anjan is good. There is no fundamental problem with Amrit Anjan as of now. Tarsans is good. No problem there. SIP in this. I'm trying to answer as many questions as I can, guys. So I'll miss some uh, discussion modules. It's not end of the month, so we usually do it end of the month, Manish. Right? So you'll get an email, or you would have already gotten an email. Is Bajaj Finance a good buy? I don't know about the pricing level, but overall the stock was very good. In fact, I made some videos also. Right at that point in time, I invested. I'm not doing anything on Bajaj Finance. HDFC AMC, I'm bullish, right? Because I have like the 2-3 year viewpoint. Whenever the stock markets make a bull run, right, or whenever there is like it cuts its previous high, AMC market will grow because automatically their AUM grows, right? So their asset under management, as it grows, it becomes more profitable, and you will start seeing the impact on the stock price also. How do you stay invested in such falling market? You don't check your portfolio only, right? So yeah, so that's what I would say. Tata Motors, I'm not. I've never been an investor in motor stock, right? So. Mm, Raghav, I've already commented quite a lot on Vault, right? Since Vault issue has, can you please advise how we can alternate? I've already, neither I was an investor in Vault, guys, had already explained you the entire situation. I'll make a probably an entire video on that topic, right? To help you understand what updates are there. But you must be getting emails from them about the court proceedings, what is happening, what have been the updates. And unethical companies run away, right? If the company is standing in front of you giving you regular updates, you guys are smart enough to see the company is not running away, right? So thank you, Karthik. I want to buy ITC for defensive purpose. When can I enter? Okay, that's a good question. I have not researched on when you can re-enter. Even I have not re-entered, right? So I'll probably make a video on that. Okay. Amazon is a very good stock, I will say. Steel companies, I'm not buying. Sugar stocks, I don't buy. Infosys is very similar to TCS, right? So you can split your money into TCS and Infosys. Vedanta, please. I'm not a buyer, right? DMart is good company. If you have some information on Vedanta, right? See, Zomato is a type of a company which will go from, let's say, 1 to 100, or it will go to complete zero, right? So if you're okay with that bet, then only invest. Swing trading with zero on mutual funds. Theoretically, yes, you can do that. Yeah. Tata power companies generally just avoid unless it's a swing trade. Should we purchase Asian Paint and Pidilite now consolidating fall in oil prices? See, don't buy it because oil prices are falling. No one knows the exact oil prices, what it is. And it's not because Asian Paints and Pidilite will consolidate because oil prices falling. Stock market is forward looking. It falls or rises with the anticipation of oil prices falling and rising. So unless you can say like, hey, 6 months from now oil prices will be low, therefore I'm buying Asian Paints and Pidilite or selling Asian Paints and Pidilite, then it makes sense. Because oil prices have fallen now and you are buying it, that does not make sense. Okay. IDFC first. Why you didn't buy today? Because I already purchased at this level, right? So for example, right from 15,500 to approximately 17,000 levels, my buying was already done. Okay. So since market is already at that level, maybe if it falls more, I'll buy more. Otherwise, I'm already invested. Right? TTK Prestige is very good. There is no problem. Alibaba is good, no problem. HDFC Life is very good, right? Do you believe in astrology? Not much. Meta. I'll make an updated video. Meta UI path, because see, Nasdaq itself right now, if you check, Nasdaq is trading at a 33-34% discount. So if the entire Nifty is trading at a 34-35% discount, all the tech companies are going to fall, especially something like UiPath, which is a highly volatile tech company. Okay. Okay. All right. Okay, guys. Thank you so much. I think we'll call it a close, right? But I hope you enjoyed this short session. I hope it was able to calm your nerves. In passing, what I would suggest is that, hey, you need to pick a narrative. If you are bullish about if you're bullish about a particular company, if you're bullish about the entire economy, and if you believe in government's ability to handle the crisis, then Stay invested at least till 2024, right? That's what I would say. If you're not, then it's a different issue altogether. Okay, so I'll take like a couple of more questions. Thank you, Karthik. I have Reliance shares. Should I hold? I just need suggestion. See, just I don't know what part of your portfolio if it makes. If it is making more than 10% of your portfolio, then lighten your position. Otherwise, Reliance is a good company. There is no fundamental problem there. Okay. All right. Thank you so much, guys. We'll limit it to 30 minutes, right? But I hope you enjoyed this brief conversation. And do watch the videos. I'll keep on making more fundamental videos. And I'll see you soon. Okay. Bye.